Hey everyone, and welcome to Earnings Cheat Sheet for Friday, February 6th. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, we're through a lot of the big tech earnings, but there's still some important ones headed our way. So, what do you have on tap for us today?
Yeah, there's no superstars, and so we're going to look at a number of them. But these are three of many the names that are worthwhile looking at: Howmet Aerospace, Arista Networks, and Vertiv.
All right. Well, let's start with Howmet Aerospace, which is scheduled to announce Q4 earnings on Thursday, February 12th. Earnings for the defense play are projected to rise 39% to 97 cents per share, while revenue is expected to climb 14% to $2.12 billion. And here's why we're watching Howmet. We'll want to see if there'll be continued tailwinds for commercial aerospace equipment and aftermarket. The defense sector is also a little bit of a wild card. There may be fewer catalysts, but geopolitical hotspots could keep demand solid here in the near term, Ed. And I think expectations are really high here for Howmet. That are coming off a series of consecutive earnings beats and had a strong upward revision to its long term outlook. And any management comments on that defense backlog and engine spare parts demand, I think, will be really key here for investors, Ed.
Yeah, and this has been one of the better performers of the last couple of years, especially when you think about non-AI stocks. This has been up at the very, very top. I mean, so definitely one to be watching. The aerospace group is doing very well. So definitely want to see how this one performs. As you say, they've had solid growth. The growth is starting to slow down a little bit. It's supposed to slow down a little bit more next year. So just want to see what pace they're going to have, and if investors are satisfied with that.
Yeah, and hopefully, in terms of that growth, they just announced a big acquisition as well towards the end of December of consolidated aerospace manufacturing. So, just another area there potentially to keep an eye on. But let's look at the chart, Ed, and see what story that tells us. How Med Aerospace breaking out of this flat base area with a 211.95 pivot point. Uh, Looks like it had a little bit of up and down action, hit this high of 226.87. It's pulled back, but it's testing support at the 50 and 21-day line. So almost in a buy zone here, but basically right at that pivot point ahead of earnings.
Yeah, so there's some mixed messages here. Certainly, the chart looks pretty good all in all. Yeah, it's not great that it came back, but a lot of things have been happening. The relative strength line hasn't fallen too much, and after I think the RS line was at highs, so it's held up reasonably well. If it moves back above the old buy point, which I guess is still valid, and that sort of coincides with the 21-day line, it sort of coincides with the downward sloping trend line. So you can imagine all these things. If it comes on earnings, this would be actionable. The negative that I see is that you can see some high volume selling. I mean, there's been, there's been more those pink bars than the other, and it sort of lines up with the AD rating is a D minus. That's not particularly good. And on a weekly chart, there's the up down volume ratio that we can see, zero point 0.9, which is below 1. It's not terrible. It's not the worst, but you can see last week's drop, just sort of there's just been some volume, in that front. So just something to be watching out for. But on the other hand, you can see this huge steady run it's had, really impressive. And that relative strength line, that's what it's outperforming the S&P 500. I mean, when I talk about this is one of the very best stocks over the past couple of years. Doesn't mean it's going to continue, but you definitely investors should be paying attention to this one. If you're looking for a growth name that isn't AI per se, I think there is some kind of AI type of thing that they can do with that's out there. Everybody seems to have something, but still generally not. So that'd be the only thing that a little bit, some of that is a little worrisome, but a really interesting action that.
Yeah, and just looking deeper at the fundamentals, as you mentioned, looks like growth may be slowing a little bit for 2026. We can see the EPS growth also decelerating a bit as well. But any other thoughts here with Howmet Aerospace?
And I just want to see how this also means for the rest of the group. A lot of them already reported, but still want to see, there's some names. This is sort of in the engineering. There's Carpenter Steel, there's GE, there's some other names out there that, this could be helpful for them and just how that works out.
All right, well, let's go ahead and move on and take a look at Arista Networks, which will report Q4 earnings on Thursday, February 12th. Earnings for the computer networking provider are expected to rise 17% to 76 cents per share, and revenue is projected to increase 27% to $2.38 billion. And here's why we're watching Arista. We'll want to be keeping an eye on full year guidance for fiscal year 2026, as well as any gains in Arista's Ethernet market share. I think NVIDIA is the big competitor there. And, Ed, Microsoft and Meta are also pretty big customers for ANET here. So any commentary on their CapEx spend, if they see a shift perhaps away from chips to networking, could be a big win for them coming up here in 2026.
Yeah, so I mean, one of the interesting things about it that we're seeing these AI infrastructure firms struggle a little bit, even though the capital spending is huge. It's sort of like if you were talking to me as a kid, Ed Carson's going to spend all his money at the arcade. It's going to be twice as much. You would think that arcade stocks would rise on that news, but we're not seeing that lately. There seems to have been a risk off, despite the fact that everybody has spent a crazy amount of money. I mean, there is always the risk that Arista could lose existentially to NVIDIA. And, we want to see how things are. Arista was making a nice move a couple of weeks ago, but that faded off. But we'll see about that. But yeah, I want to see that growth. The growth again is slowing a little bit. It's been really strong for a few years. It's still supposed to be solid in 2026. I mean, one thing is people might be asking, well, why can't you grow even faster, given that the spending is so high from so many of these companies? Meta, as you say, a big customer, and they raised their guidance in particular a lot. And there's just in general. So, that would be something investors may be looking for. It's like, oh, okay, I see your growth is slowing, but you're not really going to slow, are you? You're going to keep on accelerating. We're going to reaccelerate. I don't know. So that would be something to see the investor reaction to the earnings and guidance. And they generally they don't tend to blow things out. They tend to beat things by a little bit and then guide up by a little bit. So want to see if they change that at all.
Yeah, we'll see what the comments are there. And just in terms of the chart here, Ed, it looks like maybe Arista was in some sort of consolidation here with the 164.94 perhaps being a traditional pivot point. It cleared this recent high of 141 back here on January 22nd. But as you said, it's given back those gains and more, now trading below the 50-day line. So what would you like to see happen here with this chart?
Yeah, it needs to repair. Just a couple of days ago, it was sort of forming a handle. I mean, on a cup base or something. Well, it's too low now. I mean, it's way too low at this point. So it needs to get back. I mean, the recent highs would sort of be where I would think would be an entry because it's just too steep. Yeah, I could retake the 50-day line, but that would just seem too steep, and there'd be a lot of trading just above that. So I think needing it to get up to that level is what I'd like to see. It's definitely one to watch. And if the market turns around, people, it's like, well, all these infrastructure stocks should be rallying a lot, right? But doesn't mean that Arista has to be one of them. So definitely, it's probably going to take more time after this and set up again. But it has been a solid performer. But it also, as you can see from the chart, it goes through some pretty big declines. For a company that has some solid earnings and fairly steady earnings growth, there have been pretty big drops. There's in this base, pretty sharp drop, from 164 to 114 in just a few weeks. The prior base, there was a huge, ugly gap down. I think that was related to probably related to one of the, Meta or Microsoft, actually, probably because it wasn't on earnings, but it really sold off substantially. So it's just something to note. It's just that it seems like a steady eddy in terms of the earnings, but then, but the stock can have some pretty violent sell-offs as well.
Yeah, definitely sold off here last earnings, Ed, back in November. But we'll be keeping an eye on this 151 level here. Those are the recent highs you mentioned. And just jumping over quickly to the weekly chart, we can see it's a little bit below the 10-week moving average, maybe flirting with that 40-week line. But anything else jumping out to you in terms of fundamentals? As you mentioned, looks like a little bit of a deceleration here in terms of earnings per share and earnings for 2026. But anything else you'd like to comment on?
Yeah, not really. Just that it makes these big moves. I think people might be interested to see, well, can their growth pick up again? Because again, if there's all this money being spent, can they? And it seems to be almost accelerating. that can Arista grab, a decent chunk of that and maybe see faster growth.
All right, well, let's hop on over to Vertiv Holdings, which is scheduled to report on Wednesday, February 11th. The electrical equipment provider is expected to see Q4 earnings up 30% to 129 per share, and revenue is expected to rise 29% to $2.86 billion. And here's why we're watching Vertiv. We'll want to know how big its backlog is now. We'll also want to hear any comments on the latest with NVIDIA's partnership, including any of Vertiv's planned systems to support NVIDIA's upcoming Vera Rubin chips. And Ed, it seemed like for the last couple of years, we're really talking about this liquid cooling technology. But I think this year, investors really want to see that actually shipping out at scale. And the stocks is trading near all-time highs, so I think the market maybe will be looking for more than just a beat here from Vertiv for these earnings.
Yeah, this one tends to be volatile on earnings. I mean, there are going to be some big swings intraday on the daily, ultimately. Yeah, this has been a strong performer, and I think they do even more. They're not just cooling, they're trying to do more like AI infrastructure. I still think a lot of it is cooling. This is, for a while, the growth had been slowing, but it finally sort of accelerated again a little bit, with some strong growth. It's supposed to be pretty strong next year. And yeah, I want to see how that's going. Obviously, in addition to Vertiv, it'll be, well, NVIDIA earnings a week or two after that, what they have to say, because Vertiv can have everything ready for Rubin. And then if NVIDIA says, we're delaying it for a year, that would have an impact as well. But yeah, this is one of the bigger names in the AI infrastructure space.
And looking at the daily chart here, Ed, it looks like Vertiv attempted a breakout from a double bottom base on January 22nd, 189.66 being the pivot point there. Another one that pulled back, it's testing the 50-day line, but it seems to be holding above. But what are your thoughts here on the technical action ahead of earnings?
Yeah, I suppose technically you sort of could still treat that 189.66 as a buy point, but I really am looking more at it as as a handle. The handle from the recent highs, and you can have handles and double bottoms. Sometimes below that double bottom V, or sometimes above. This is sort of in between. So I would use that because I think it needs to get above the prior buy point to really get through that, or at least get through a big chunk of that handle to do that. So maybe in between those zones is where you could do an early entry or a downward sloping trend line from that handle, like 195. I don't know. So we'll see something in there that might be interesting there on earnings. The relative strength line is pretty good. So if this one moves out, I mean, look, you can see how, and this is, look, versus the NASDAQ, I'm sure this is doing much better. This is versus the S&P. So yes, it's fallen back a fair amount, like, 10% or so, over the last week. But the relative strength line hasn't fallen much. So if we did get up to 195, if we did get up to 200, chances are the relative strength line would be at or near highs. So that is potentially bullish there. And it was interesting, back before it made its move, there was like, well, why isn't it making a move? A lot of these other infrastructure stocks were moving. So it was a little disappointing. On the other hand, it isn't breaking down either. So now it looks a little better. So on the upside, it was a little like, well, you're a little late, but they're also not the first, they didn't fall through. I think holding that 50-day line is really important. But again, we just have to see the market's in a delicate spot, and the earnings itself are just so crucial.
And just jumping over here to the weekly, Ed, kind of similar to Howmet here. It's pretty good EPS and composite ratings, but accumulation distribution sitting at a D minus here. Anything else jumping out to you here on the weekly chart?
Yeah, and you can see some of those high volume weekly declines sort of in the middle of that base. Unlike the other one, is like Howmet, the up down volume ratio is a 1.3, so that's a little more positive. This one's in the AI space, and I just sort of feel like if AI is going to do well, this seems like one that does well, but this one makes huge declines. If AI is struggling, as it has been recently, the AI stocks, if AI stocks are struggling, this is going to struggle too. I mean, that's so you obviously need that tailwind. If there is that tailwind again, this seems like it'll likely be a winner, but there's just no getting around that you need that theme to be working.
Yeah, always important to pay attention to those market trends. Those were some of the top names on our list, Ed, but there's always more. Let's just start with Robinhood here. Earnings there due on February 10th. And this one was doing pretty well for a while, but it has since dropped off. It's well below the 250-day lines. But again, I feel like this one generates a lot of interest, especially among younger investors. I'm sure crypto may have some part of this move here. So, any thoughts here with Robinhood?
Yeah, crypto is clearly probably the biggest driver of that, and it was a driver on the way up too. You can't just say, "Oh," people often, won't look at the big forces. They'll say, "My stock is amazing," and they won't think about why it's going up. And it's like, well, this is broken now. I mean, this is absolutely broken. You could have held out some hope before it broke through the 200-day line, but now it's breaking down. And you just have to call up IBIT, which is sort of like, it's not just that Bitcoin is down, but this is probably going to depress trading for a while. I mean, I'm sure there's plenty of trading right now, but the enthusiasm for Bitcoin might be substantially less. So the earnings will presumably be fine, but Bitcoin is an absolute free fall right now. I
Yeah.
don't know. And so if Bitcoin rebounds, yeah, Robinhood will rebound, but it is going to need a lot of repair work to for that, and the fundamentals are likely to get choppy for a while for Robinhood.
All right. Well, let's go ahead and move on to on semi reporting on February 9th. Again, the chip space has been holding up pretty well here, Ed. This one trading above this buy zone here from a recent breakout of a 57.52 a cup with handle base, but looks like maybe forming another consolidation or flat base here. So thoughts here on semi.
Yeah, so I think this one, the relative strength line, doing pretty well in recent weeks. Uh, this one can make some big moves as well. So I'm not super excited about this particular name, even though it's working well. I mean, I know it's involved with EVs, but there's a lot of volatility with this name, and earnings have been weak. It's supposed to turn around again. But it just uh, this one could work very well. But I think that it just doesn't seem like an A level stock right now, given some of the technical swings and the earnings, which I know are supposed to improve.
All right. How about we take a look at CoreWeave earnings there on February 18th? Again, another one, an important name in the AI space, trading below these 250-day and 21-day lines. But why pay attention here to CoreWeave, Ed?
It's still one of the data centers. It's tied to NVIDIA. I think that they have a lot of financing needs, but that's to say with a lot of things. Can they make all that work out? It needs to rebound. It rebounds a lot, but it goes on these runs, and it's been making lower highs and lower lows for a while. It hasn't made a lower low yet in its recent downtrend. But yeah, this one is going to swing a lot. I think people want to hear what they have to say about AI data centers in generally, but how they're going to do it, how they're going to finance things. So yeah, but definitely no go for a while as a buy.
Yeah, and we talked about Arista Networks, but Cisco also has earnings next week. A potential competitor there. This one in a buy zone after breaking above an 80-81 pivot point. Ed. Um, so thoughts here on Cisco? I mean, this one hasn't really done much here for a while, but looks to be setting up.
Yeah, and if you go on a monthly, and you might even have to shrink the screen, I mean, the thing, but it is finally breaking out of its 2000 peak, I believe. So that's a long base, but finally moving out. It can take a long time. This monster stock of the 90s. They've got networking. They're doing a fair amount more software, even some cybersecurity. The growth still isn't that tremendous. So that's one thing. I'm not sure what's really pushing them, why they're stepping up when a lot of why and Arista's down, software is down. So it is impressive stock performance here. Um, but yeah, so I'm interested to see what they have to say about their growth going forward, but it's acting very well, but I wouldn't do anything before earnings.
All right, how about we just take a look at one more name in the semi space with Applied Materials earnings there due on February 12th. Another name here that was looking pretty good up until about a few days ago. We saw this sell off happen back here on Tuesday and continuing on Wednesday. It looks like maybe trying to hold at the 300 level.
Yeah, and it's finding support at the 10-week line. It's the second time it'll have found support at the 10-week line since the bounce. You can buy the first or second bounce. That seems more like an add-on opportunity, and it's pretty violent drop, so it's not an easy buy. But maybe if it pauses here and then bounces, you could add on some shares. There is some 3 weeks tight. It could base again. That would be nice. But yeah, we're finally seeing a lot of those chip equipment names that the stocks have been running and their fundamentals are finally starting to supposed to turn around, though it seems like like later next year it's supposed to fall again. So I'm not there seem like some other names that have stronger growth in 2026 than applied materials. So this may not be my top choice even among these names that have been doing really well.
All right, how about we look at a couple biotechs reporting next week? Edward Life Sciences is one, earnings there on February 10th. Uh, this one in a flat base, but looks like potentially with the move here on February 5th, that base could be broken here, Ed. Any thoughts here with Edwards Life Sciences?
Yeah, just struggling here, and relative strength line just hasn't been great, and the growth rate hasn't been great, and just I know that Boston Scientific that's been melting down. Some medicals are doing very well, but there's also some medical products firms that just aren't, and this one's sort of in between, and it has these big moves up and down, so it probably just doesn't seem particularly safe to me.
What about Insight? Because they also have earnings on February 10th as well. Uh, this one, again, attempted a breakout here on January 7th. It pulled back, but it looks like it's been, trading tightly around the 50 and 21-day lines here. So any thoughts here?
It is interesting. It's like making a decent move on this particular day. Probably going to be forming a flat base, fair relatively soon. Maybe on a weekly. I'm not sure. It may not be there in time, but it won't technically be a flat base when earnings come in, but it'll be pretty close. So I think people could use that as something that would be actionable after earnings. Yeah, it's been making a nice run, the last year or so. Really strong growth, this year, and supposed to be decent growth next year. And this
All right.
this this 2026. I keep on saying that next year, but for 2026, it's supposed to be decent growth this year.
All right. Well, let's just switch gears completely here. Let's look at Cleveland Cliffs earnings there on February 9th. And again, this is, producer of steel, iron, in that metals space, forming a cup with handle base with a 1535 buy point.
Yeah, a couple of the rivals have already reported, and this one also doing like so. You could have a buying opportunity after there. It has some big swings, and also I think Cleveland Cliffs has sort of put itself up for sale or parts of its sale. So that would be another thing that could be. I think that's one reason why the stock gapped up on earnings last time. I don't know all the thing, but then it sold off again. So I'm not sure why there was the gap up and sell off, but I think it may have been something to do with that. So that is something that could make it a real big swing. What they have to say about sale prospects as well.
All right, how about we take a look at Cameco? That's ticker CCJ. This one, another one, kind of in that mining metals space, had this breakout on January 9th, had this nice move, a 20% gain, but it has since pulled back over the last 2 weeks, now trading below the 21-day line. Um, Basically, it was round tripped this buy point here, Ed.
Yeah, and I think CCJ over the last couple of years, buying it off the 50-day line has been the safer thing because there's been a lot of fake breakouts or breakouts that quickly fail. Not always, and sometimes it doesn't stop at the 50-day line. So when it's but it just feels like that. Seems like that buying it off the 50-day line has been a little bit better. And if you had bought it off the 50-day line, you'd still be up. In this last time, there was sort of clear breaking above the 50-day line, breaking above some short-term levels. Yeah, like right in that day you'd still be up and still could hold. Now, it doesn't mean, you could choose to take some partial profits because you've given up some gains, but that just seems like something. So that's just the nature of CCJ. AI energy plays, like a lot of other things, are going down, despite the fact that people are spending a ton of money on AI. These infrastructure and the energy stocks just are not doing well this week.
Yeah, and how about we just wrap up with a transport play here? Scorpio Tankers earnings there on February 12th. Transport area has been doing pretty well here over the last couple weeks, as this market kind of whipsaws back and forth. But this one trading just above a buy zone here. At so, any thoughts here with Scorpio Tankers?
Yeah, it seems a little extended here. Obviously made a really strong move. It's the earnings are supposed to be strong this quarter and then be strong maybe the next couple of quarters. I don't understand this market as well as much like, and obviously it's not the kind of thing, it doesn't move on oil prices the way that some other things do. So I'm not as familiar with it. So the fundamentals just are choppy to me. So it seems like a little extended for now, but it has definitely been acting well. And there are definitely in this shipping and pipeline and transportation area has been improving quite a bit recently.
All right, Ed. Well, thank you so much for your insights today. We really appreciate it.
Thank you, Alexis.
All right. Well, that wraps it up for this episode of Earnings Cheat Sheet. If you want more market analysis, be sure to tune into Stock Market Today. That goes live after the closing bell. And thanks so much for watching. We'll see you right back here next week.